Hello, good day. This is Si Wing Yi from the Yi Real Estate Network, and welcome to this presentation. Just want to share with you, I've been helping thousands of real estate investors to buy turnkey positive cash flow properties at 20 to 25% down payment. So this is the major metrics, right? This is the major numerical blueprint to achieve success for real estate investors. Again, we help many middle class, upper middle class potential real estate investors, especially if you live in a market that uh, the cost of buying a property would be too high. So you may have to go out of state. So if you live in California, for example, or you live in Pacific Northwest, Seattle, or Chicago, or Boston, or New York, or somewhere in areas where the price is too high and you have to go out of state to buy positive cash flow properties. All right. So again, I've been doing this for a very, very long time. I have entered many real estate markets throughout the past 20 years, and we have helped thousands of investors to achieve positive cash flow, to create a real estate portfolio using a turnkey approach, using property management, the whole turnkey approach. All right. So you can scale your portfolio. You can buy up to 10 investment properties in different part of in the country, in the best markets in the country, and we're going to share with you how to do that. Right. So today's podcast, we're going to talk about. I'm going to use a scenario. Let me share my screen. I'm going to give you a real quick formula that you need to understand. I don't want to overwhelm or bore you, but this formula is all about the math, right? And I'm not asking you to be your mathematical genius, but it's a very simple formula to achieve success in real estate investing. So here we go. I'm just going to use one formula because, again, I do not want to overwhelm you. There are other formulas. So today we're going to use rent to value ratio. That means if you can achieve 0.07 to 1% rule, this 1% rule, you will achieve positive cash flow. Now, this is based on the metric. You can have 20 to 25% down payment to buy a single family home rental or up to fourplex. That's the ideal, right? You use Fannie Mae favorable lending guidelines for investors, right? Up to 10 mortgages. Again, 1 unit to 4 unit. This is pretty much our business model for a typical real estate investors out there. So 0.07 to 1%. So let me give you an example. If you want to buy a $100,000 investment property, multiply by 1%. If you can achieve $1,000 monthly gross rent with a 20 to 25% down payment, you should achieve monthly positive cash flow, right? This is the initial blueprint. So if you want to buy investment property, $150,000 to $200,000, you cannot use the 1% rule. You have to most likely, given the changing dynamics of what's going on, 0.07% multiplied by the purchase price. So 0.07 multiplied by, for example, 150 to 200K. So the projected gross rent before the deductions would be around 1,200 to 1,550. And then the final parameters, if you will, for investment property. This is all single family home, by the way. If you want to buy a duplex or fourplex, same formula, 1% to 0.07%. So 200K to 350K single family home investment. So use a 0.07% rule again. So multiply 0.07 from 200 to 350K. So your monthly gross rent should be around $1,650 to $2,200. Again, all this is based on 20 to 25% down payment scenario. Does that make sense? All right, I hope it does. So with that in mind, I'm going to share you another screen that will show a particular website that recently that shows the top 10 best rental markets to invest in. Look, over the years, there are many of these kind of websites or headlines from various organizations. I take it with a grain of salt how accurate they are, because a lot of these titles, a lot of these metrics, I do not necessarily agree on it, because again, we have vast investment background over the many, many years in different markets in the country. And I will tell you from my real world, from a transparent experience of what are my thoughts in terms of some of these top 10 rental markets. Okay, so you'll be surprised. A lot of these markets are not what you think it is. So just because these markets have been growing very fast in the past few years, it does not mean you, as a real investor, should buy an investment property in this location. So, okay, with that in mind, in fact, let me go from the bottom 10 to the top number 1. Okay, so at number 10, Phoenix, Arizona. Yes, Phoenix has grown tremendously in the past few years during the pandemic, 20-30%, what have you, one of the fastest growing. We all know that. But now, if you look at the median home over list price in Phoenix, as you can see, $392, right? But the average price to charge for the rent is $1,547. I say it again, I'm going to repeat this concept quite often. Do the math. Do the rent to value ratio that I actually do. 0.07% to 1%. Now, if you find a single family home in Phoenix, Arizona, that are costing you $392, 0.07% of that is how much? Like $2,800, right? Let me do my calculation. 400, yeah, $2,800. I'm telling you one thing, you're not gonna get $2,800 rent on the purchase price of $392, right? So that's way, way below 0.07 rent to value ratio. So once again, just because Phoenix is growing very fast, the rent to value ratio does not make sense. If you put 20 to 25% down payment, right? The gross rent in this marketplace, you're not going to cash flow. You can have a monthly negative cash flow. You can have a negative return. So forget about Phoenix, okay? Number 9, Atlanta, Georgia. Atlanta, Georgia, yeah, 5, 6, 7 years ago, yes, you can cash flow quite well, but the skyrocketing prices in the past few years has made this market very, very challenging for real estate investors. Now, and the median price for a single family home in the Atlanta, Georgia metro, as you can see right here, 412. If you multiply by 1% rule, 1% multiplied by 412, are you going to get $4,120 monthly gross rent? No. So if you put 20 to 25% down payment as an investor, which is typical, minus if the gross rent, the gross rent, you're not going to get that much, okay? I can tell you right now, right? You can Google, you can use Zillow, you can Google redfin.com, to click on a particular property in Atlanta, Georgia. So you're going to have to find a property in this Atlanta market, maybe not downtown, but maybe 30 miles in a suburb. Maybe you can find a $350,000 property that rents for $2,300. And then you may be able to cash flow at 25% down payment, maybe, because right now the investor loan rate is around 6%. So I do the numbers. So cash flow is kind of disappearing in many markets. So again, in Atlanta, Georgia, if you can find the suburbs, going deep in the suburbs, 30, 40 miles somewhere. I don't know Atlanta that well. We used to promote property there 6, 7, 8 years ago, but the prices have gone up way higher than the increases in rent. So therefore, rent to value ratio is not attractive. So there are pockets in the Atlanta metro where you may be able to cash flow at 25% down payment. You're going to have to find a property around $300 to $350 that could rent for $1,800 to $2,300 at 25% down payment, a 6% interest rate in order to break even or cash flow. So this market is really on the fringe of not being a good, attractive investment. So, all right. And number 8, Houston, not just Houston, Dallas, similar. Austin similar, which we'll talk about it later. But the rising prices in Texas in the past few years has skyrocketed, making cash flow quite difficult. All right, so again, you're gonna have to find, like I said before, a single family home, $300,000 that rent for $2,100, right? 0.007% ratio, rent to value ratio. So cash flow disappearing in Houston. Should have invested there 6, 7, 8 years ago, but now it's getting harder. Cleveland, Ohio. Cleveland's still okay. Is one of the Midwest market types. Much older homes, appreciations have not been that high, so you might be the cash flow. Property there, the overall, let me see. The median price of a home in Cleveland is $115,000. I'm not sure. Okay, it's probably higher than that. So the data from this particular website are to me are not all that credible. All right, but this is just my strong personal opinion, because my my team in the many areas of the U.S. markets over the years, they consult with me to let me know what's going on in their particular market. All right, so yeah, you can cash flow. You can buy a $115,000 property, a quite old property, maybe built 60 years ago, built 80 years ago, 3 bedroom, 2 bath, 1,100 square foot, built 1940. At the price of $115K, yeah, you can project the rent of $1,000. That's fine. You can put 25% down payment. You can cash flow a couple $100. So Cleveland, is a still cash flow market. It's a stable market. So that's a possibility. And number 6, Raleigh-Durham. The Raleigh-Durham, we're promoting Raleigh-Durham right now in our organization. However, the prices have skyrocketed in the past few years. So Raleigh-Durham is very, very hard to cash flow these days, although it's a very, very good market, very fast growing. The Research Triangle Park is located in Raleigh, and many high-tech companies are moving into the area. In the past few years, the future growth is very, very good. However, a good single-family home located within 30-mile radius of a Research Triangle Park is 3 bedroom, 2 bath. Home built in 10 years ago, newer resale is already selling at $400,000. If you're selling $400,000, you need a rent 0.07%. 0.0% multiplied by 400,000, you need $2,800 monthly gross rent with 25% down payment in order to cash flow. Are you gonna get $2,800? Most likely not. Let me give you the metrics. The maximum rent for a single family home on a historical basis is most likely is around $2,400, $2,400 to maybe $2,500 today. Even the rent has been skyrocketing. All right, in the past few years during the pandemic, it's hard to cash flow in the Raleigh-Durham market. So yeah, you might have to put down 35 to 40% down payment on a $400,000 single family home in order to cash flow a couple $100 a month. Okay, when I say cash flow, it's your gross rent on a monthly basis minus your mortgage, minus your property taxes, minus insurance, minus your property management fee, minus 5% vacancy factor, minus 5% maintenance factor, equal at the end of the month, whatever the cash flow it is. Break even, a slight positive cash flow monthly, or whatever. All right, so Raleigh-Durham is becoming challenging. So be careful where you buy in that place. And Boise, Idaho, we all know, right? I mean, 2 years ago, Boise, Idaho was during the pandemic, everybody working remotely, what have you. So investors and home buyers have, because they are able to work remotely, they have a lot of people from California have moved over to Boise, Idaho 2 years ago, and the prices have skyrocketed at least 50% in the last 2 years. This is insane. So 5, 6 years ago, yes, it's great to buy investment property there. You get 25% down payment. The median price 5 years ago is maybe $250,000. Now, the median price, let me see what they say is correct. The median price right in 2022, it says median price in Boise is $425K. I don't think so. This data is really behind. It's probably 500,000, right? the price has increased so fast. So, some website mentioned that this kind of a fast-moving market or overvalued market, yes, they are overvalued, right? So, but then again, what does the word overvalue means? I don't know. But no, I do not recommend you buy investment property in this location because a price of a single-family home in Boise, even in the suburbs, 20 miles away, where the price is supposed to be cheaper, at $450,000 single-family home, 3-bedroom, 2-bath, built 10 years ago, whatever, you can expect you need around $3,000 monthly rent, $3,000 monthly rent in order to cash flow at 25% down payment. All right, so you're not going to get that. You're not going to get $3,000 rent. The highest rent you can get on a single-family home is probably like $2,500. So you need a purchase price of $300,000 or $320K in order to cash flow. And the median price of single-family home in Boise is way higher than $325, $350K, right? So Boise is no longer an attractive investment property. So, and number 4, same thing, Austin, inside Austin, like 4 years ago, the median price in the Austin Metro is probably around $300,000. Today, the median price inside Austin is $665,000. This is absolutely mind-boggling. We have investors that purchase that we guide them to 2 years ago, 3 years ago. The investment homes they buy at that time they bought is around 220, 250K. That very same house today, 2 years later, or even a year and a half later, has grown 50 to 75%. In some instances, have grown 100% in value. Insane in Austin. So, have you pulled the trigger in Austin, Texas? 2 or 3 years ago, you made out like a bandit. But for those of you who did not pull the trigger, you did not get the equity, you stay in the sideline, that's shame on you. But now it's too late to buy inside Austin. If you want 1 hour to the north, 1 hour to the south of Austin, there are still some cash flow possibilities at home prices, investment home prices around $300,000, renting for $2,200. That's an ideal scenario to purchase, but it's not that easy to find. The suburbs of Austin, north, way up north, okay, 1 hour away, there's a possibility. And we have some partners on the ground there to assist with you if you want to buy a break even or slight positive cash flow with 25% down payment at 6% interest rate approximately in order to cash flow a little bit slightly. That's number 4, Austin. Number 3, Salt Lake City. No, should have bought Salt Lake City around 6, 7, 8 years ago when the prices were very low, you can cash flow. And nowadays, the median price of a house in Austin, let me look at what they say here. I'm not sure. It doesn't have it, but it's still quite high. I would say the median price of a single family home in Salt Lake City is probably like $500,000. So the number does not make sense anymore. So I would not buy, as an investor, I would not buy a rental property, a single family home rental property, even at 25% down payment. You may break even if you put 50% down payment, but then, who has that kind of money to buy just one property at 50% down? So Salt Lake City, sorry to say this, is not an attractive investment. 2022, this year, and for a long time to come. Sorry, you're too late. You're late in the game. And rank number 2 is Tampa, Florida. We used to promote Tampa, Florida 5, 6, 7 years ago, when the median price of a single family home were maybe $200,000. Now, 4 years later, let's see what they say on this website. The median price of a single family home is like $390K, right? Although the rent has been skyrocketing in Tampa, but you're not going to cash flow 25% down payment on a loan. So you're going to have to put down 50% down or pay all cash, okay? But when I say Tampa Metro is very large, right? You have to the west of Tampa, 10 miles to To the west, you have St. Petersburg, which is a very expensive beach boom town, right? Very, and then to the inland, to the east of Tampa, to the north of Tampa, yeah, into the suburbs. Yes, the prices are cheaper, but not that much cheaper. So, median price of a single family home is way more than 390K. So this data are very, very old, even though this article just came out very recently. So I take it with a grain of salt whenever I see newspaper articles, links, or other so-called website that show this kind of data. So I'm very skeptical, but I just speak my mind. All right, that's how it is. So Tampa, if you go further away, 1 hour to the east, to the north, and to the south of Tampa, into the suburbs, you may be able to find a single family home for like 300,000 that rents for 2,200, 2,300 that meet the 0.07% rent to value ratio, then you might be successful. And finally, Orlando, Florida, Central Florida, we have promoted, my organization promoted Orlando for the past 10 years. Had you bought 10 years ago, single family home there like 100K. Now, the price of single family home inside Orlando is probably 400K, maybe even higher. That's how it is. So forget about investing in Orlando. The price has gone, has off the rooftop skyrocketing. So you have to go deep inside Central Florida and into the outskirts, into the suburbs. Like I said, in Ocala, to the east in Palm Bay, Florida, to the south in Sebring. Yeah, suburban growth, you can still buy investment property for 300 to 230K that have a good rental income. So there you go, right? I just gave you the top 10. Hope this helps. So again, anytime as a risk investor, as mom and pop risk investors, when you run across all this kind of top 10 this, top 10 that, faster growing market, fastest rental market, I take it with a grain of salt. You have to look at the underlying data, how this website find those information, because oftentimes they're very inaccurate, they are very misleading, okay? So because we have boots on the ground all these years, our organization, we deal with the local partners in each markets, many markets in the US, especially South and Southeast. We know the areas to invest. We know we can assist you to buy with the lowest price of a home with the highest rent. So you can meet the rent to value ratio of 0.07 to 1%. All right. So hopefully this helps. And I know I have taken longer than usual. Thank you for listening and good luck. And thank you for watching. And if you want to take the next step, you could subscribe to my channel. And also you can click on our website to put your email into our free newsletter, so you can get some free real estate education and take the next step. Thank you so much. This is Si-Wing Yi from the Yi Real Estate Network. Thank you so much. Have a nice day. Bye-bye.